Good evening, traders. This is FXRBS with ForexSimplified.com, and we are with the Monday class. I just want to make sure what screen you guys are looking at. If you see a disclaimer form, just say yes in the chat box so I know what screen you're looking at. Okay, so I'm broadcasting the right one. So today we will be talking about advanced risk reward management and also equity management. A lot of traders don't realize how important all that is, and I will show you with some simple math how you can change a lot your trading just by calculating the right way your position sizes, and to develop some rules for yourself of what risk reward ratios you need to be trading, because every strategy based on the accuracy need to have different risk reward ratio. I mean, like minimum risk reward ratio in order for you to be trading that strategy. And if you're not following those minimum risk reward ratios, even though it seems to you like you're winning, you probably on the long term you are losing. And I will show you a few different examples so you guys can understand all I'm talking about. But first, I will give an example of how I calculate and how I compound the sizes every month. This is something simple, probably something all of you guys know already. I just want to go over it in case some of you don't. And I will open a notepad file just so I can type some numbers in it. And if at any time you guys have any questions, just let me know so I can answer your questions. Now I will give an example with account that has $5,000, and let's say we want to risk 3% of the account. Now I personally risk between 1 and 3% on my account. I get this question a lot. On most of the intraday trades, I would risk 1%. If I'm trading a position trade, I can go to like 2 or 3% of the account. This is how I change my lot sizes. Now, the way you should be counting your lots is this. So let's say we want to risk 3%. Those 3% on $5,000 are $150. This means that we can risk up to $150 per trade, which means that, let's say hypothetically, we have a trade that requires stop 30 pips. Now, if we have stop 30 pips and we can risk $150, this means that we can enter with 5 mini lots on this particular trade. So you're supposed to be calculating your lots for every trade. I know that a lot of traders, what they do is they know how much they can lose, and they choose the trade uh, based on the stop, and they trade the maximum they can. And what you're supposed to be doing is, based on your trade, your true and the stop that you're supposed to place in this trade, you're choosing the size that you want to trade. So let's say you want to you can risk $150. This doesn't mean that you can go and trade one lot and risk $150 on this one lot, but you can separate those $150 in a few different lots and have different targets. Now, if we risk 50 mini lots on this trade with 30 pips stop, we can lose $150, and this is 3% of our account. Now let's say we have a trade with 60 pip stop. Now we can only trade 2 lots. It's actually 2.5 mini lots of what we can afford on this particular trade. Now, I know people who would trade, let's say, a standard lot, and they say, okay, I can only risk $400. That means that the biggest stop I can have is 40 pips, because they want to trade one standard lot. And to those people I can say, why wouldn't you take a trade that, let's say, with 80 pip stop? Well, they're saying, well, then my stop would be $800, not $400. Oh, in this case, you can trade not one standard lot, but you'll be trading 5 minis, and you still are in those $400. And this is the way you should be thinking. You should be choosing the lot size based on your stop, and not your trade based on what you want to invest. Do you guys see the difference between trading one lot and risking always not more than 40 pips, and the ability to trade, to take different kind of trades, but calculating your sizes to adjust the size to that particular trade? You can even trade a stop that is 200 pips if you want to, but then you won't be trading one standard lot. Now you'll be trading like maybe 2 or 3 minutes, something small. If this trade looks good for you, why not? Don't get stuck with trading the same size on every trade. Adjust the size based on your stop. This is the way you should be doing it. And now, we have decided that we want to risk 3%, and this is 150 pips, $150 worth of risk. And we're going to be trading with those same rules for the next month. So every trade that you take for the next month, you can risk only $150, and every time you do your analysis, you say, okay, this time I need to risk 50 pips. That means that I can enter with three lots. And if you can enter with 3 lots. Let's say you can place one at target 1, one at target 2, and then one at target 3. If you can enter with, let's say, 6 lots, then you put 3 at target 1, 2 at target 2, and 1 at target 3. And you will manage your lots based on how much you can enter. And later I will tell you how to choose how many lots to place in each target. So let's say the next month your account has $6,000. You do exactly the same math, 3%. You calculate how much is 3% for those $6,000, and you set your new rules, and you do it all over again the same way. And when the next month is done, let's say you have $7,000, 3%. You calculate how much 3% is, and you do exactly the same thing for the next month. And I hope it's in this direction, going up. Now, I get this question all the time, and the question is why I don't like scalping. And here I will explain my personal view about scalping and the reason I don't like it. And I don't want to make anyone agree with me or anything. I will just do a simple math in front of all of you guys, and then you'll decide for yourself. And George knows that. Now, I will give an example, like standard scalp for in the industry. A lot of people do like 20 pips, 30 pips, and what they do is risk reward 50-50. I mean, like if you risk 30 pips, you go for 30 pips. And let's say hypothetically we do 10 trades with 30 pip stop and 30 pip profit. And hypothetically we're 60% successful. That means that we'll have 6 trades times 30 pips, correct? Then we'll have 4 times minus 30 pips, and then we'll have 10 times average 3 pips for the spread. Now here we have profit 6 times 30 pips, it's 180. Then we have loss 4 times 30 pips, this is minus 120. Then we have loss minus 30 pips for the spread, it's another minus 30. And the total after 10 trades is plus 30 pips profit if we were 60% successful. This means that we made 3 pips per trade. Now, I don't know for anyone else, but I personally don't want to be sweating in front of the computer for 3 pips per trade. Now, let's say you're 70% successful. Then we'll have 7 times 30, 220. Then we'll have 3 times 30, that's minus 90. Then we'll have again 10 times minus 3, which is minus 30. And we still go to the total of 90 pips. Is it 90? I want to make sure I'm... Yeah. If my math is bad, guys, just let me know. Now, in this case, with 70% successful, we made 9 pips per trade after 10 trades. Well, how many of you guys are more than 70% successful? Now, even if you're 90% successful, those 9 pips per trade won't change too much. And I'm sure not too many people can be 80 or 90% successful. Now, they say that good trader is probably about 65 to 70% successful. I know some of my friends, my close friends, who have been trading for over 10 years that go to like 80-85% successful on scalping strategies. But those are people with a lot of experience, people that can afford to do that because they go in a trade with $50,000, $60,000, $70,000. I have a friend who's trading like hundreds of lots per trade, and he's going for like 20 pips per trade, but he's trading for 15 years. Now, even if you go with like 5 pips more, you can do the math for yourself that the numbers won't change a lot. But I'm sure you guys can do all different maths. I'm with this lesson, I'm not trying to tell you don't scalp, but if you scalp, calculate everything. Like make sure that the math is in your favor. I'm not telling you don't scalp because yeah, there is people making money out of scalping. But the thing is that you need to do it the right way. Even if you're doing it, make sure that you go and think about all the details. Okay? Now, another thing that I'm always talking about is risk-reward ratio. And everybody is like, why have you like constantly repeating risk-reward? And if I could, I would put this in red. Now, this example here was, I believe, for one-to-one risk reward, correct? So this here with the 70% risk reward, I mean like with the 70% winning ratio, both examples were with risk reward one-to-one. And I will ask you before I start the math lesson again, let's say we change the risk reward from 1 to 1.5. Now how much, and I will do exactly the same example with those 30 pips. In this example, the first example with 1-to-1 risk reward, the total profit was 90 pips. If we change the risk reward to from 1 to 1.5, how much difference do you think that this total will make? What would be the new total? I just want to see you guys guess some numbers. How much do you think it will change it? Like 30, 40, 50 pips? 60. Like we're changing the risk reward with 50% only. Daniel was saying 25. I just want to see different people guess, and yeah, the most logic number that you hear is probably 45, because everyone will count half of the profit and will put it on top. But guys, I will just do the math in front of you. It's simple math, as you can see, and you will be amazed how big of a difference there will be. Again, we're risking 30 pips to have the reward of 45. So we'll have 7 times 45, and this is 315. Then we'll have 3 times minus 30. This is minus 90. And then we'll have 10 times minus 3 again. This is minus 30. And the total is 195. So the difference between the last total and the new total is more than twice. It's 105 pips difference. By us changing the risk reward from 1 to 1.5. By changing the risk reward only 50%, we gained 100% over our total profit. And this is a lot. Big, huge difference. Now, I will amaze you even more. In this example here, with the 60% is even, the difference is even more. I think, let me see, 6 times 45. This is 270. Minus 120, minus 30. The total in this case is plus 120 pips. The difference is 4 times. From 30 pips, we went to profit of 120. 4 times difference. Only by changing the risk reward from 1 to 1.5. I'm sure that no one of you guys have ever thought about it this way. But small changes in your trading strategies, in your trading plans, like simple, small, very small things can change so much your account. They can, believe me. This is extremely simple, something very small. It takes a pen and a paper, and you can do huge, big difference. Now, I want to give an example of how, if we have this is just first target. Now, I was going to do this with the multiple targets, and then it's now this is just for the first target. This is just for scalping. Here is only scalping. Most of the scalpers like do just one target. I've been only talking here about the risk reward and how the risk reward will change the total profit. Now I will give you an example of how using the same risk from scalping and position trades, what the difference in your totals would be. And I know this is all hypothetical, guys, but I'm sure that this will make you think. And I will give again an example with 30 pip stop loss and 60% of accuracy, but for position trade. In those position trades, usually we have target 1, target 2, and target 3. And if we risk 30 pips on target 1, we expect about 45 pips on target 2 because we trade with 1 and 1.5. If your target 2 is at 45 pips and you're following your rules, the average target, I mean if target 1 is at 45 pips profit and you're following your rules, your target 2 will be averaging about 90 pips. If you're risking 30 pips, your target 3 will be averaging about 160 pips. Now here is the little catch that of course you get hits on target 2 and 3 a lot less. So if we're 60% successful on position trading, that means that target 1 is hit 6 out of 10 times. If you have target 1 hit 6 out of 10 times, most likely you have probably half of those 6 times you have target 2 hit as well. And probably in 1 out of 10 trades, and this is very low number, you get target 3 filled. So in 10 trades, target 3 will be stopped out. It will get filled only once. Now note that only 4 of those 10 times you get target 3 stopped out on negative pips on loss. The other 5 out of those 10 times you get stopped out at break even because you'll be moving your stop once your target 1 is filled. But anyway, let's do the math here. No. 6 times 45 is 270. Then 3 times 90 is also 270. And 1 times 160 is 160. Now this is an example with using 3 lots. Correct? Now, if we use 3 lots and we get stopped out 4 times like on all those targets, that means that 4 times 3 lots times 30 pips will be the loss. And this is 360 pips on 10 trades. Now, the total profit with the loss, with calculating the loss, so we have 270, 270, Let me bring up a calculator. 270 plus 270 plus 160, and then minus. This is the profit. So the profit is 340 pips. Out of 10 trades. I want to go back to this example here, that we made 30 pips out of 10 trades by being 60% successful. And this was by trading one lot. So even if we go and multiply those 30 pips 3 times, we're still going to get about 90 pips, which is about 3.5 times less than what you would get by risking the same out of a position trade with the same successful rate. Now, I want to give a different kind of example. Now, on one single trade, if you're risking 30 pips times 3 lots, you can lose 90 pips is what you can lose. This is your potential loss. I want to see what the potential win out of one trade is. And I will add 45, 90, and 160. And this is I think 295, 160, yes, 295 is the potential profit from one trade. And I want you to think this way. You need one good trade and you can cover 3 losses. So out of 4 trades, you need 1 good and 3 bad, and you break even. Meaning that even if you're 25%, if your accuracy is only 25%, your winning ratio is only 25%, but you're following the rules in your strategy, you need only 25% winning ratio to break even. So even if you're 50%, you'll be making a lot of money if you're 50%. And I want to ask you to make money with scalping if you're 50%. Victor is asking, how can we be 10% and break even? Yes, you need to be at least 25% to break even, yes. Because one trade, if one of your trades fill all your targets, only one, and you lose in 3 trades in a row, If you lose in 3 trades in a row, each trade will bring you loss 90 pips. So 3 trades will bring you negative 270 pips. And then the next trade is a winning trade. You'll make 295 pips. You'll be actually making 25 pips with 3 losing trades and 1 winning trade. If you're following your rules, if you're calculating everything the correct way, and if you're following your strategy. Now when we're entering, Lori has a good point here, but when we're entering intraday trades that have 3 targets, most of the time all the targets, I mean like all the lots are positioned, I mean like all the stops are positioned at the same place, so all your 3 targets would have exactly the same stop. Now if you're going to calculate a different trade where you have a 50 pip stop, then your profit must be not 45 but of course 75. The thing is that you need to follow risk-reward rules in order for you to have everything in your favor. I'm just giving an example with 30 pip loss here. It can be 50. It can be, this can be, you can calculate exactly the same example here with 80, 80, 80. But then this will change from 45 to 120. That means that your first target, if you're risking 80 pips, need to be 120. Then your second target needs to be 160. And then your third target is, I can't even calculate it. I need to take a look at the chart to tell you how much the third target will be. But you see what the idea is, the point. With the 30 pip trade here, I was just giving an example so we can compare the different strategies with the same stop and the same loss, with the same rules, and how different they look at the end. And then we have something else, something that we always need to think about. And different trades will give you different opportunities, different levels. You won't be able to place your limit everywhere you want. So what you need to do as trader, you need to know how good your performance is. What is your target 1 winning ratio? What is your target 2 winning ratio? What is your target 3 winning ratio? And I'm saying this, I mean that your personal winning ratio. You need to, if you want to calculate everything the right way, you need to know what your personal winning ratio is, because if your ratio is too small, then your risk reward needs to be different as well. But then when your risk reward ratio is different, that will also change your winning ratio. So it's kind of tricky. But what I mean is, let's say that, let me give an example. Target 2, we said that, okay, we have stopped at 30 pips. And so you will understand what I mean. And if we are 60% successful on the first target, means that we will lose 120 pips no matter what. Out of target 2, we'll be losing 120 pips every 10 trades. This is the money that we'll be losing. And we know, okay, target 2 will be losing 120 pips every 10 trades. Now, here, if target 2 profits 90 pips, that means that you need to have at least 20% successful rate on your target 2 in order for you to be making money. Meaning that you need to have at least 2 out of 10 to be profitable on your target 2. Because 2 out of 10 will give you 90 pips times 2, 180 pips profit. And you were risking 120 every 10 trades, and you know that you'll be losing those 120 pips. Now, you know that you'll be making 90 pips every trade, but here you need to know that out of those 10 trades, you need to have at least 2 good for target 1, for target 2, in order for this target to be profitable. Do you guys see where I'm going? If you can't win 2 times out of 10 on the second target, it's better if you put those money in target 1, because it will bring you a lot more money. And again, we go to the other way. Even if you're you know that 2 out of 10 times you will be winning. But let's say this trade allows you to put your target 2 only at, let's say, 50 pips or even 55 pips. Is there a point for you to be placing this target at 55 pips if you will be losing 120? That means that hypothetically 2 out of 10 times you will make only 110 and you will lose 10 pips at the end. And I'm not even calculating the spread here, but I'm just giving you an example of how you should be thinking when you're deciding either to put money on this target or not. Because it is very important. Those are small things, and you'll say, okay, yeah, I can make 55 pips. But actually on the long run, by making those 55 pips, you might be losing. So you need to watch the market all different ways. And yeah, this is like Neil says, a common sense, but I know that a lot of traders are not doing it, and a lot of traders will see their account go up, go down, go up, go down, and here in this page is the reason why some people can see their account go up and down all the time. And it's only because you guys don't calculate the position size and your risk reward the correct way. If you do, this will change your trading dramatically. And it's something very simple and something very small, very, very small, but I guarantee everyone here, it will change your trading. It will just apply it. I know that it looks like a lot of stuff to do in the beginning. Once you get used to it, you won't even think about it. Just you need to know that yes, I need to pay attention to all those small details. Now, I'm not sure if I can understand the question of Victor. What do you mean? Uh, if I usually different the lots on each target, if I'm placing different uh, sizes, just give me 1 second and I will be right back. Just 1 second. Okay, I'm back. Now to answer Victor, what I do is I place majority of my position on target one. Let's say you can risk I'm thinking of an example, but okay, I don't even need to say how much I'll be risking or what, but let's say we calculate that we can enter with, let's say, 8 or 10 lots in a trade. Minus or standard doesn't matter. We can afford I mean, not that we want, but we can afford to risk on this particular trade 10 lots. And this is what we're trading, 10 lots. So 5 I will put on my first target, and I will put 3 on the second and 2 on the third. So the majority of my position I will place on the first target, because I know that it will get hit at least 6 out of 10 times. So yeah, I'm putting about 50% on my first target, and then I'm scaling out the rest. I just said 60 because I was giving the example here. But either way, if I'm 60 or 70 or 80%, I want the majority of the money to be out on my first target first, because it has the I mean, like, the highest win ratio. And then when you have less on the rest of the targets, you won't be having a lot of emotions. And see how this here was like a good calculated example. I'm pretty much calculating the way that the next target has less lots in it, but I will make pretty much the same money. You see, target 1, out of 6 lots, I will make, let's say, 270 pips. Then out of target 2, out of a lot less as position, I will make pretty much the same. And then the third, the same way. So I'm spreading all the profits away. Do you guys have any questions so far for tonight? I know that we didn't have time for technical analysis, but I hope that this session was helpful for everyone, because I really wanted to point all those small details to you guys, because they're very, very important. Yeah, this session is being recorded and will be available to preview later on the website. Yes, this class will be available for downloading and also previewing. Like, I know all of you guys who are pro subscribers will be able to see this on the website for free. Otherwise, there is charges to download the session. Now, the risk reward you need to change for yourself, and because Victor is asking, is there higher probability trades? There's always higher probability trades, but the thing is that you need to adjust the risk reward to your personal accuracy. Because if I tell you, okay, this pattern has 75 or 80% winning ratio, it doesn't mean that you will have 70%, or if I will have 70%, or somebody else will have 70 or 80%. The important thing is that you know what your personal winning ratio is, and then to adjust your risk reward ratios for each target and has those as a rule. And then, like here in this example where I said that with 90 pips we need to have at least 2 winnings in order to be profitable, and this means that the risk reward on the second target was I think was 90 on risk 30, which means that is 1 to 3. So you know that in order to have this work with at least 2 winnings, you need to have target 2 at risk reward at least 1 to 3. If your winning ratio on target 2 is only 20%, you need to have the risk reward at 1 to 3 in order to be profitable. This is what I'm saying. But this is personally for you. And it's the same way for each target. If you know that your winning ratio is this much, you need to have at least that big of a risk reward. Now your target 2 can have winning ratio not 20 but 40 pips, like 20, I mean not pips but 20 or 40%, like 20% winning ratio on target 2 is very low, but I'm just giving it as an example of what the way to calculate is. Yes, exactly. If and now has the point, like if your target 1 is hit, then you won't have loss on target 2 and 3, and this is why I always had 4 losses. I always was calculating everything with 4 losses, because if we have at least 6 wins on target 1, it means that only 4 of the trades will get stopped out of target 1, target 2, and target 3. Once target 1 is filled, target 2 and target 3 won't get stopped out. I mean, they can get stopped out, but at 0, not negative. Which means that only 4 out of 10 times you will be losing, and you'll be losing on all of those positions if you're 60% successful. And also 60% successful is very, very low on position trading and pattern trading. But still here, I'm giving example so I can explain myself easier in front of you guys. If I trade 3 positions, yes, I do like 50% on target 1, 30 on target 2, and 20 on target 3. This is the way I do it. Like Neil is asking what my personal success rate is. Sometimes I can do 75%. This is in like a good week, 75%. But this is a week where pretty much this week will make it a quarter. But then I can do maybe 50, 60%, 65, and still be really profitable. Like very bad weeks can be like 30, 25, 30%, where you barely make some money. March has been terrible for me personally, but still managing to collect some pips. My Why do I think March was so difficult? Probably because we had a lot of consolidation, a lot of uncertainty in the market, uh, a lot of surprising uh, news, and also the market moving. Uh, I don't want to say not the way it's supposed to move, because there's no way. I mean, like there's no such a way. Like you can't say that the market was supposed to do this or that, but uh, we've had cases where commodities will do something and then currency will do something completely different that usually they're in correlation and stuff like that. We had a lot of difficulties this month. I'm sure that a lot of scalpers probably did well over March. Well, okay, guys. I hope I answered everyone's questions. If you have more questions, let me know in the chat room, and I will see you later in the chat room, and then tomorrow morning for the morning session. Thank you, guys.